Good afternoon, everyone. This is Chrisi from Solstice ATR and Balkan Capital Research. Hope everybody's enjoying their weekend. This video will be for the coming week, taking a look at the overall market using the Fortune 500 company, the SPX. Due to the coronavirus on Thursday and Friday, we sold off a little bit. But one thing we recognized, we bounced off the simple moving average 18. Is this going to continue lower or are we going to reset to go higher? Okay, let's first of all take a look at the small cap RTY, the canary in the coal mine. And what I'd like to look in Russell small cap is basically, it's taken a little while. Okay, there we go. We are in an up channel. If you notice, we came back down and went back up. If I'm going to consider this is the head and this is the shoulder, or is this the head forming here? This is the shoulder, this is the head, and this is the other shoulder. So could that be an inverted head and shoulder in order for the Russell to hold the 18 and 50 simple moving average to continue higher, or do we fall down? So first of all, keep an eye on 1665, 1660 in the Russell for us if we're going to fall back down, or are we going to continue clear the 1705 area to continue higher? So that's the small cap. Let's take a look at the Dow Jones Industrial Average, which is the YM. And the YM seems, to create that M pattern. Is this going to U-turn at the 50 simple moving average or lose the 50 simple moving average to come back to the prior low down here? The most important thing, does the Dow represent all the companies in the US? No, it only represents 30 companies combined. So is this the leader of the pack? I don't think so. I always look at the NASDAQ 100 and the S&P for direction. Let's take a look at the small cap. The NASDAQ NQ, the NASDAQ 100. And if we notice, the NASDAQ 100 had looked onto the Thursday's price candle, went into it and came back and fell and closed a little bit weaker, but inside the consolidation of the last week or so before the holiday. Remember, we had a long weekend. We came back to this area where we consolidated and broke back up. We had side action. That day was a short week. Then we had the push up Monday, Tuesday, Wednesday, Thursday, then Friday came back in. We bounced off the 18 simple moving average. In order for us to continue lower, keep an eye on Monday, Tuesday action. If we are below this 18 simple moving average, the most of the range that we're going to fall, I'm just going to kind of give you a highlight to show you how to look at it. This is a big area to highlight to the 50 simple moving average and the upside of this channel. It can look far. That's very far points. That's about 90, 100, 90, 50 area, which would be about 90, 60 by the time it gets there, or 90, 70. If we lose the 18 SMA, we can fall to the 50 simple moving average and this up channel here that's going yellow to the upside. Let's take a look at the the ES/ES. And if you notice, the simple moving average did the same thing on the Fortune 500 company on the daily. We came down to it and we bounced off back inside the Thursday's range. Does this mean we are bearish? We are a little bit bearish, but unfortunately the market is telling us something. If we cannot get back to the 33.75 area to continue higher, because this action, the 33.9750 happened in the overnight on Thursday. We had 33.9375 the day before, which was the prior high. We had this in the overnight action, the 33.9750. We couldn't look above. We opened and we fell straight down. If you look at the open in this candle, the open was 33.9175 inside the Wednesday's range, but we couldn't close in there and we fell down all the way down to the low of 33, 39.75, and we pushed back up to close at the 67.75. So we had a 5-day range bound, and unfortunately on Friday we gapped down. We looked to the 18 SMA and came back inside the range to close on Thursday's low. In order for us to continue lower, the 18 has to lose it Monday, Tuesday. Keep an eye on that. And if we fall back, we fall to fill the first gap, second gap, and that's the 50 SMA, which is taking us from down here and this channel here. If we fall down, this is the area what we look for the first bounce, if not to come back down to here. If we continue back up and clear the 70, back to clear the prior overnight action that happened, which is 97.50, in order to fix that problem before we can come back down. And always those tops have been fixed in the prior action. Let's take a look at a couple of instruments just to go over them. AAPL. Remember, Apple is saying that they cannot deliver on the next quarter. And what did Apple do? Created a rounded bottom, came back to a channel. It missed the 50 SMA. It's below the 18 SMA and underneath in that consolidation. This was the prior consolidation before the earning report. So let's keep an eye on it, in which direction it heads. Let's take a look at Amazon. Amazon, similar situation. It had a hard day on Friday staying up. It fell down in the range but missed the 18 SMA. 18 SMA is going to be very critical in Amazon. Let's take a look at FB, Facebook. Facebook is still in that uptrend, but still hold. We had Thursday, Friday, it looked up and fell down below the 50 SMA. If this is going to fall, keep an eye on the first thing, the channel. It has to hold. If the channel doesn't hold, look for the backside of this consolidation in the 116 SMA, unless we turn. Let's take a look at Google. Google had Friday came to the 18 SMA and the prior breakout of this channel here. Is this going to consolidate or fall back to the 50 in order to bounce? Let's take a look at NFLX, Netflix. Netflix had an inside day of the Thursday's action, so it's not as bearish and still away from the 18 SMA. Let's take a look at Tesla. Tesla seems to be interesting. It still stayed up in the upper range. Remember, we had talked about it for a while that, hey, it can go back to 1,050. It had that push up, after the Monday. You can see that Monday, Tuesday, Wednesday, Thursday, Friday. It stayed inside the Thursday's range. It never was able to take it down. It never took that small channel, up channel here. If it's going to consolidate and continue, it has to clear the 960, let's call it 970, in order to get back to 1,000. Or if it falls down, keep an eye on the 845 and eventually fill that gap, fall to the 18 SMA. Let's take a look at when resort, because of the Asian coronavirus and people are not doing, a lot of, activities outdoor and going to casinos. It fell down, missed the 116 SMA, but fell below the 50 and the 18. This is a little bit bearish. I would look for it somewhere in this range in the consolidation. Let's take a look at Goldman Sachs. Goldman Sachs, had a down move. It's below the 50 SMA. Can that downside channel hold it in the 116 SMA to continue higher? Let's take a look at WMT. This is something very interesting. Amazon was holding up as well as Walmart. If you look at Walmart, even on a down day after the earning report, the report came higher on the setup, and it continued higher to where it showed up to the upside, because this candle was a down day on Thursday and Wednesday, and unfortunately Friday it pushed higher and continued, and it closed inside the prior range. If this is going to continue and they think that the coronavirus is going to get under control and they're going to find a cure in Asia, and things will turn around and continue higher. Be careful, because this is a consumer products and distribution, so people need that stuff if they go back to, online and everything goes well. And as your market, look for the other side. Let's take a look at the ZB, the bond market, ZB slash ZB. That's the 30-year note. If you notice, because of the fear gauge, it created that head. That's the shoulder. I mean, that's the shoulder. That's the head. That's the other shoulder. You have got like one, two, three tops. In order to continue, it has to break this area to continue higher or fall down. The ZN shows it a little bit better. That's the 10-year note because the interest rates is low. And you can see that's the shoulder. That's the head of it. That's the other shoulder in order to continue higher or reverse. Let's take a look at GC, gold. This is very interesting. I marked the overnight action in gold because I noticed something here from the report since we went back to the 1460 area. We consolidated for a while, took off, consolidated, came back in, took off, and we made that rounded W shape, and we broke out at this channel. We had this gap here in the overnight and here as well, and here and here. In order for gold to continue, if this is the fear gauge, my up target is 1678. If this turns back down, things do change in the market, and the S&P, doesn't continue lower, and the Nasdaq 100, we'll be able to tell Tuesday and Monday action. If we stay below the 18 SMA, we can continue, to the downside. But if we stay above it, we're going to continue back up on the S&P. And if you notice, we are very far away from the 18 simple moving average in this channel, and at the same time the 50. In order to come back a little bit, it needs to retrace a little bit to create that roundness to continue higher, but watch out from it. And let's take a look at the CL, the oil. Oil, if you notice, it's coming back up. Is it going to get back, because if as your market come back online, oil price is going to be, there's going to be demand for oil manufacturing stuff, transportation, shipments and stuff. It's going to drag the price back up. Keep an eye on the 54.75. If you noticed on Thursday, where did we tap into? The 54.66 came back and reversed, but we stayed inside the prior Wednesday, Tuesday range to the upside, but we have a hanging man, inverted hammer, and we got a hammer on Friday. In order for us to continue, we have to come back up. So let's go back and rewrap the ES, and what I want to use is the monkey bars to show you something. This is the daily charts on ES. We're still in an up channel. We are holding the 18 SMA. Keep an eye once again on the Monday, Tuesday action. If we stay below the 18 simple moving average, most people use 20, we can come back and retrace to that channel in the 50 SMA on ES. So let's go from the daily, break it down to a 78-minute. We can see that the overnight, where would we came back to consolidate in that range, and we did hold the 28 area, 23. If we lose this area, this is very important. This is the area where we took off from, we consolidated, pushed up, came back to it, fell underneath it, continued higher, went side action. This was the short week. We had the holiday, President's Day. We don't usually count that. We came back down, pushed up. This is our POC. We have this VPOC that's up here. We have another POC up here in the 80 range. So we got two virgin control points higher while we pushed lower. The POC never immigrated lower, because if the bears were supposed to take it lower, the POC was where? In the 40 quarter range, and I'll show you that why it is. Where did we close? Inside the Thursday's range. If the bears were supposed to push it lower, we should have immigrated lower, never came back and settled in this area. If the volume was supposed to be picking up to the downside, we would have fell further down and we would have picked up steam further. That was a liquidation break on Thursday. We pushed back up. Friday we opened, we couldn't get back in on Thursday's close. We continued lower and we got a nice bounce off the 28 area. This is very critical for me. If we lose the 23, then we fall down to fill this first gap and the second one down here. Let's take a look at style. We go in the chart mode and we go to monkey bars. And if you notice, this is a 4-hour, 20 days. We came back in that consolidate. We fell down into this POC and we bounced right off it. So that 37 area, we visited it. If we're going to fall, we got to continue lower. And what I'd like to do, go to a faster time frame, like a 5-day, 15-minute, to show you the difference, why I'm talking about it. If you know, I talk about the value area high, value area low, and this is the POC. If you noticed on Friday, the value area high stayed in the range of the Thursday price action. The POC stayed inside the Thursday's action, and the value area is a little bit lower, which is around the 31 quarter. In order for us to continue lower, we have to lose the 28, lose the 18 simple moving average to continue lower. And I can kind of like zoom down and I can show you that the price action range in the last couple of days was higher. The POC immigrated lower that day, but we stayed inside the range. Then Friday we fell down, but we came back inside. So this is one thing to recognize, that the price action, I'm going to go to setting, to the to the chart, and go back to standard, and we can see that the range on the 20-day, this is the gaps that we had in the overnight. Those gray areas shows it between the lows and the highs of the prior candle, and this is why I have them marked. When we come back to them, usually we slice through them to fill partial gaps, and we have an up channel. We're still in an up channel on a range where we're holding those two channels up and lower. So keep an eye. If we lose the 28, look for the 14, 15 in this gap, and this eventually the second one. If we do hold and stay inside the range and the 18 simple moving average hold us up, this is the gap on Friday from the close and the prior overnight action. In order to continue back up, we have to fill this gap to come back to the 80. We have one virgin control point, which we have never revisited up here. So we're stacking virgin control points up the top, but we have about 12 on the bottom. So keep an eye what the market gives us. Trade what you see, not what you think. And this is the most important thing to do in trading. Don't be biased to one side because you hear the news. And you remember, the market makers, the news on the exchanges, the news that's coming out from a TV box is going to harm you and keep you in the correct side of the trade, because they will tell you, oh my God, something went wrong. Trade what you see, not what you think. And most importantly, you can check us out on Discord or on our website, solsticeatr.com. You can ask us how you can subscribe and get 1 week free chat room live, not just a chat. It's a live chat room which I give the feed on the trades, entries and exits, and why we are in it and why we are out of a position. So have a good weekend. Look forward to seeing you next week. Take care.